Eric Muathe, Muathe.com, with another video discussing intraday trading or day trading. And here we're going to take a look at this high here because it presents a good lesson. And what we're going to do is use a line connecting the lows. These lows here, as you can see, even that low. So this was a well-established line through this low here. So let's do that, and you see that we get a break point, and the break was off the highs right here. Since then, we've seen that the stock has come to hit that level there, or the ETF, which gave that short-term high. Again, there was rejection here for another short-term high, and we can see that there was also rejection here recently, which gave the high that we are discussing here. And from that resistance, we've seen a swing trade to the downside, or an intraday swing to the downside that has lasted about a day and a half or slightly longer. Now the takeaway here is also we can see that this resistance level here on the backtest failure, so what we've done is pretty much we extended that line, and the resistance level here happens to be also at about 61.8, which just meant that it was more meaningful and a level that one would have watched for potential resistance. If you had, on hindsight, quote unquote, you can see you had a chance of owning this from here to the current levels, which is lower. Eric Muathe, Muathe.com. Of course, this is simplified because we are looking at what happened, but you see this in many charts, especially once you study the big time frames. You see the same scenario playing out also in small time frames. Eric Muathe, Muathe.com. As always, good luck, peace and blessings. E-A-C-S. Haha.